Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. When people talk about landlords in the UK, there's often a very simple picture painted that the market is dominated by small accidental landlords with one property. But when you actually look at the data, the reality is far more nuanced. Because while small landlords make up a large portion of landlord numbers, a huge amount of rental property is actually concentrated within larger portfolios. In this episode, we're going to break down the structure of the UK private rented sector, who really owns the stock, what's happening to smaller landlords, and what this means for the future of property investing and the rental market. Let's dive into it. Mark, welcome back to the latest episode of the Prime Property Finance Podcast. How are things?
Yeah, very well. Very good. Thank you. Yourself?
Yeah, also good. Thank you. Looking forward to having a bit of a discussion today around what's going on in the market and the various elements of what's actually happened in the private rental sector, who owns properties and who doesn't, what the kind of rhetoric is going out into the market, and whether that's backed up by actual data or whether that's not quite, everything isn't quite what it seems, which is usually the case when the press are involved, etc. So just as a high level, what is this episode about? What are we looking to cover off here?
So I think, we try to make property or demystify property where we can. That's the whole point of this podcast series. All of the episodes are relating to that and informing people. We aren't necessarily clickbait and headline grabbers, which newspapers and the likes will have. So we've seen a lot of things such as, mass exodus is a phrase you hear a lot for buy-to-let landlords leaving the sector, and those sorts of things. And just thought it's that time of year where the reports and the landlord confidence surveys and whatnot start coming out from various different sources. And then when you actually start to dig down into the numbers don't necessarily support the headlines that you'll see in the press around what's going on with landlords. The Renters Reform Bill has just come on. So the impact, everybody was expecting that to have a massive impact on everything. And yeah, it so transpires to date that it doesn't necessarily translate into this mass exodus that everybody's been speaking about.
Yeah, so let's look at the numbers then. So to give people some context around what the PRS, the private rented sector, is made up of. So obviously the private rented sector is all rental properties that are rented by private individuals or private limited companies. So this isn't your council houses, this isn't your housing associations, charities and various other social housing. This is private rented sector. Yeah. So if you go on the Rightmove and you're trying to rent a property on your own, and the likelihood is the type of property you will find on a Rightmove search or a Zoopla search for a property to let is from the private rental sector. So how many properties are currently in the PRS?
So what I find interesting as well is no definitive number for this. So England keeps their own register, so does Scotland, so does Wales. But as a guide, there's approximately just under 5 million properties in the private rental sector. So 5 million households / properties in the sector.
And so out of that, what do we think, how many landlords are there?
So again, there's no one source of truth on this. So the nearest number I could find was 2.3 million for England. And then if you include Scotland and Wales, 2.8 million landlords in total.
Yeah, okay. So we're looking at, in the UK, there's roughly around 30 million. Again, we don't know the exact stats. Around 30 million properties in the UK, of which around about 5 million-ish are private rental sector. and that's made up of 2.8 million landlords. And what is the breakdown then? What's the understanding of the breakdown of that? How many people own how many properties?
Yeah, so we've got 45% of the population own one property. 38% of that population owns between 2 and 4 properties. And then 17% make up 5 or more properties. So what you would consider your portfolio landlords, inverted commas, are your 5+. And then, as you can see, quite a large percentage sit below that figure. So 4 and below is the lion's share of the market.
Yeah, so that's the breakdown of the landlords. But actually, what does that look like in regards to actually property data?
So what we're looking at here is we've got those that own one property own approximately 1 million properties. So those landlords that have one, your accidental landlords, if you like, equate to about 1 million of those properties. Then the population that owns between 2 and 4 properties holds about 1.5 million of that 5 million we referred to. And then 5 or more properties, they actually equate for 2.5 or 2.4 million properties. So the 5 or more, whilst they are a smaller population, actually own near 50% of the total properties in the PRS.
And so this is obviously a journalist's job is to manipulate data in order to get headlines out in the press, isn't it? And I think this is, we just want to break this down to show what that looks like. And when you actually break down data to see, well, what is the state of the market and how many, if landlords are leaving in their droves, then how does that affect the marketplace? But the reality is, if all of those 45% of people with one property left the market, it doesn't impact necessarily the private rented sector and those properties available, because again, we don't know if 1 million properties were sold. We don't know what the breakdown of where those properties being sold to. Are they being sold to first-time buyers, or are they being sold with tenants in situ? But it's interesting that we do know that the average portfolio size has grown, hasn't it?
Yeah, absolutely. So in the stats supporting this as well, so we've seen that the average portfolio size for landlords has grown from a little over 7.3 to just under 10 properties, so 9.6, I think it was, or something like that. So what that's also telling us, I believe, is that we are seeing this mass exodus, inverted commas, but that's primarily in the accidental landlord space, who are leaving the sector because of the increased legislation, perhaps more hassle than it's worth for £150 a month type approach, which I get it, understand. You perhaps haven't got the systems and processes in place that you would have if you had 10 properties. So that can be a bit of a headache. So we're seeing those leave the market potentially, or a large proportion of the leavers coming from that space. However, what it looks like is that the portfolio landlords are actually acquiring potentially that stock. So these properties aren't actually necessarily leaving the private rental sector, just the landlords themselves. So I think we said about this before. We've had similar conversations this in the past, that we do anticipate a bit of consolidation in the marketplace, where these properties will come out of the hands of the accidental landlord, the one who doesn't want to get involved anymore, and then move that across then into the larger portfolios where they have the systems and the processes, the economies of scale to make that 150, maybe 200, and then you multiply the compound effect of more properties in the portfolio.
Yeah, because if we look at, we've been speaking to a couple of landlords recently who are looking to sell their portfolio, and yeah, great, they're looking to sell. They want to sell it. They're considering whether they sell the properties off individually or whether they sell the property and the company as a whole. And so, yes, if you look at that in a blinkered view, that landlord is leaving the market. News, press. Yeah, but who's bought that? Who's bought the portfolio? Another investor. So, just because one's leaving, it doesn't mean that that's the net reduction in properties in the PRS, isn't it? And I think that just goes to highlight how easy it is to manipulate news and data and activity to suit propaganda.
Yeah, and interestingly, there was a piece in the press this morning around the slowdown in the property market. So, as we know, the property market isn't driven by investors; it's driven ultimately by home movers and homeowners. So, when the price of something goes up or goes down, it's not because investors, every investor wants a deal. So, if that was the case, every property value would be going south, not north. So, it's driven by home movers. What's interesting is that has slowed right down in itself. So it's not as if we're seeing all these properties come to the market in the first instance. And if they are, they're just not selling anyway. So we may see increased voids and that sort of stuff. I think there was a stat that said of those listed, 2 of the 5 didn't actually sell that are listed on Zoopla, which just goes to show the supply and demand on the buying side is still out of kilter. And as we know from the rented side, the demand still outstrips the supply side of the conversation. So it's not as if these 500,000 people are now flooding the market on Zoopla to sell their properties and they're going. That side of that conversation slowed down. So it must be finding its way, as we said, into investor portfolios and a consolidation of the marketplace. Because it's probably stock as well that, if you think of portfolios, probably stock that serves a certain type of marketplace anyway that isn't going to go out and be snapped up by buyers and so on and so forth. So there's something to consider there as well.
And the other thing as well with landlords who have tenants in situ, they would rather sell. It's easier for a landlord to sell a property with a tenant in situ rather than have to go through the process of trying to evict them, wait a notice, then list the property for sale whilst the property is empty. There's a whole lot of reasons why a landlord would rather sell with a property tenanted, and therefore that's not a market for a first-time buyer, is it, with buying a property with a tenant in it? So they just kind of cancel each other out, really.
Yeah, I just find it really interesting that when you actually start to pull apart the numbers, yes, you can lean on one side of that conversation, which is, it probably is true that accidental landlords are leaving the marketplace. Or if they're not leaving the marketplace, they're probably consolidating into the 2 and 4 position themselves anyway. So it's up or out, I guess, for a lot of things. We were at an event hosted by Aldermore last week, and they were saying the same thing, really, is that there is no knee-jerk reaction to what's going on in terms of interest rates, house prices, and those sorts of things. A lot of people still have the mindset that this is part of their pension, and this is a long-term strategy for them, as opposed to a quick few quid this month, next month, and so on. So they're quite prepared to sit back, not realise the returns in the short term, probably paying down mortgages and that sort of thing, and with the view of it'll be mortgage free or very, very low loan to values by the time they come to pension retirement. And then they can start to enjoy the benefits of that capital that's being produced on a monthly basis. So we're not seeing this knee-jerk, interest rates going up by 0.5%, therefore I need to sell all of a sudden. Yes, we know it's getting more difficult in terms of the landlord side, but it's, again, not that dissimilar to what we've seen in Wales for 6-7 years now as to what's going on. It's sort of, we had this, this friction, this conversation in Wales when the Rent Smart Wales first came in, and there was all this change and period of change and everyone was going to leave. But actually, I'm sure there were some casualties along the way, but the large proportion of the population stayed.
Yeah, absolutely. So in regards to the actual breakdown then, so we're looking at the first section is landlords, one property, it's about 45% of the market, so it's about 20% of the rental stock. Generally these are either accidental landlords, so they've either inherited a property from family or whatever it may be. They may have wanted to move home and ended up keeping, for whatever reason it is, they've kept their first house that they bought and rented it out and then moved on to buy. We're seeing less and less of that now with the changes in stamp duty, where someone would let their existing property to buy a new one and build a portfolio that way. Maybe they bought one for retirement plans, like you said, or they might have a child they want to buy a property for now for the future. So that's generally the makeup of individual property owners. Then the next kind of category is where you've got your kind of middle landlords, that they've got sort of 2 to 4 properties. And these are the ones that probably being affected the most by these changes, where, tax changes have come in, increased in compliance, adjustments in rates make a big difference. So they've usually got full-time jobs, and they've kind of tried to buy a couple of properties for their pensions or retirement planning, but all of a sudden they're now probably feeling the pinch of all the additional making tax digital, the additional compliance, additional taxation, legislation that's getting on top of them. So these are the guys, like you said, they either need to get up or get out as well. So they may look to downsize, or they'll go, well, do you know what? I need to take this more seriously. I need to kind of be more professional. But the only way I can do that is by growing the portfolio to make it make more sense in order for it to be, so I can maybe hire someone in the business to help support, manage it. And then obviously you've got the third layer then, which is the portfolio landlords, 5 more, small in numbers, but obviously control a huge amount of the stock. And these guys are more professionalized, better systems and processes, more likely to be using company structures, potentially holding company structures as well, which is a conversation for another day. And they're just a bit more strategic in how they operate as a professional landlord. And so, there's clear differences between those 3 levels, isn't there? And when you get to that level, now you want to move away from being landlord to being an investor and professionalizing that even more. And again, you haven't got a choice now with all the changes that have come in. So you have to get on board. And some landlords, if they've been in the game for a long time and they're in this category, then they might have been hammered by all of this stuff and go, do you know what? I want out. And we are seeing that. And just because we've already touched on, just because they are leaving, it doesn't mean that there's not a market for it either.
Yeah, I think what's interesting, and we've spoken about this in other contexts, but it still applies to this one, is whenever things like this happen and margins get squeezed, one of 2 things happens. The top tier stays the top tier and the bottom tier stays the bottom tier. I liken this to your, back in the day, you had JJB Sports. So you got Sports Direct, who are your budget option. You've got JJB Sports, who were your middle tier. And then you got JD Sports, who are your premium, pricing point from that perspective. And whenever there's pressure in a sector, people either go down or they go up. So the people who are buying premium brands continue to buy premium brands because they've usually got the money to do so. And then you've got those that are in the middle tier probably get squeezed primarily down into the budget tier. And the same happens when you've got the middle class, if you like, of portfolio owners. They've got the time pressure. So they invariably are working and have a job that's of a certain amount. That's a certain income. That's probably how they were able to amass the deposits in the first place. They've not done anything particularly clever. They've just got savings. They put it into property. Seems like a logical, safe place to put it. Perfect sense, 10 years ago. And they've acquired property slowly over time as a way of supporting their pension income. So when you take the time pressure, along with probably not having the best systems and processes, because you haven't had to date, probably got a good relationship with the tenants, most of them. Have got a story, I'm sure, under their belt where they can tell you about a bad tenant, but probably have a good relationship with them and are on WhatsApp comms or stuff like that. And this is where then this regulatory stuff comes in and just creates that additional pressure, pushes more onto the time side of the conversation than it does onto the money side. Because, if they're in a 5-year debt cycle and whatever, then this might actually be a problem for them in terms of interest rates. So that's the sector that will always take it on the chin, I think, when you come to these parts. And you can see why those are probably feeling it a bit more, despite the fact that the noise is that the one with one property is leaving. And there's probably more fear and fear mongering than the pressure the middle tier are feeling.
Yeah, absolutely. And ultimately, like you said, the regulation side of things is likely to be or favour those with structure and scale, like systems and processes, and being able to, if there's increase in costs, they're able to carry those costs a little bit because there's more risk. Their risk is spread. They've probably got more margin, more overhead amongst all of the properties that they own. And there's been some news around depends how much you look into. Some people will call it a conspiracy theory, but others will kind of look at it as it is what it is. The World Health not the World Health Organization. Yeah, one of the main organizations, I forget the name of it, but their agenda is, the 2030 agenda around own nothing and be happy. And if you look at the model, we don't own no phones anymore. We basically lease them on a contract. We don't own no cars anymore. We lease them on a contract. We don't own anything per se. And it's the same with property. Own nothing, be happy. They want to move effectively to this model that we don't own anything. And with what there's talks of is, whilst they're pushing out the smaller landlords, is allowing room for more sophisticated and larger in scale. So you will have seen, probably anyone who's interested in investing, the likes of Lloyds Bank, institutional investors buying up lots of stock. Now, the government have pushed massively. Whilst we don't have council houses anymore in the old format, we do have it in the form of social housing, which is housing associations. And certainly in Wales, the amount of money that's pumped into social housing, there's far more money in that sector than there is in the private sector, especially for new builds. And therefore, that model doesn't seem to be going away by any stretch of the imagination. So there's talks of one of the reasons this coming from higher up in terms of pushing the smaller landlords out, which makes room for higher landlords. And I know we talked about some of the effects of some of these changes coming in. You see in the press a little bit about, I think it was one of the MPs who was championing some of this stuff, was evicted from their rental property on the basis that the landlord wanted to give them the notice before the changes came in. And so they were a victim of their own legislation they brought in. So it's humorous to hear some of those stories, but at the same time, it's not good, because, the people who have benefited from having good landlords, where, they might have been in the property for 10 years and the landlord's never put the rent up, that's not going to be an option going forward. Or when they were really helpful with them during COVID, if they lost their job or whatever, and they, like you said, they've got WhatsApp communications and good relationships, that's probably going to be a thing of the past. And the people that, benefited from those relationships are now going to be, if a corporate landlord comes in, it's going to be their way or the highway. There's not going to be any wriggle room. It's going to be get on with it, ship up or ship out kind of thing. So pay up or get out, and they'll just go through the process, because they'll be happy to, they'll have the funds to be able to go through that legal process as well.
Yeah, and I think all of these things are cyclical as well. I mean, if you like to view Lloyds and other institutional funders are coming into the marketplace, it tells you one thing, is that property is still seen as a stable asset class. Everybody will need houses forever, and so on. So that's validation that you're in the right space if you're in property. If Lloyds are coming in, they're probably not necessarily buying up either existing stock as much. They're probably some of the only people who can afford to do build to rent right now. Given the cost implications, not many developers are now able to retain properties because of the cost of building and so on. So I think you'll have a proportion of that will come into it. So it's arguably new stock that's coming into the marketplace that they keep holding on to, as opposed to picking up all the small council houses. I'm sure there's an element of that going on as well. I don't know the data behind it. So I think there's validation with this. And if you are someone who is serious about securing your future, if I don't want to make it sound too dramatic, but if you're somebody who's genuinely interested in securing your future financially, then property has a part to play in that, alongside other asset classes that will suit, your other type of investments, such as stocks and shares and all of that sort of stuff. So as with all of these things, diversity is invariably the way forward. Those that we tend to hear most from are those that are probably most heavily invested in the sector, and that's their one asset class that they're in, and they don't do much else, and that's fine. It works well for them, because, as we said, it is a stable. It's the oldest sector in the world, housing, isn't it? It's been around forever. So I think there's change afoot, but is it the end of the world? Absolutely not. Interestingly, we see a certain side of the conversation, and we were talking about this before we started recording, is as mortgage brokers, we have two types of conversations, really. One which is, I want to buy a buy-to-let, or I want to keep and remortgage mine and release equity maybe to go buy another, or I just want to keep and hold and so on. So we aren't necessarily having those exit conversations with people. So we see one side of the coin. If you're an estate agent, on the other hand, a listings agent, then you're going to probably see a lot more or have a lot more of those conversations than we are around, I'm going to offload my portfolio, I'm going to do this, I'm going to do that. So I think it's about context and perspective. I don't think any but one person has a true view over both sides of that conversation. I mean, we are obviously speaking with people around buying their portfolios and what have you. And it's interesting to understand the reasons they're exiting as well, because it isn't necessarily about legislation and so on. It's about other business opportunities. It's about other types of planning that they want to undertake, not because all of a sudden the Renters' Rights Reform Bill has landed. In fact, I don't think we've had a conversation about that at all. There have been other reasons why people have decided, I need to do this, I need to do that. And yeah, as you say, there's only really investors.
Which probably would have happened, probably would have happened regardless, just as the natural cycle of business, isn't it? And life. So yeah, I think the one thing that we are probably, the conversations that I've been having with some people who are looking to get in the market, you've probably been there yourself over the years where people, you're at parties or down the pub or whatever it may be. And people say, what you do, you invest in property. And they're like, oh, okay, I'd love to invest in property myself. I've always wanted to do it. And then you kind of start the conversation and then the reality of actually property ownership and management sets in a little bit and they go, maybe I won't bother, because it's not all rosy, is it? And one of the first conversations we have with people who come in and go, I want to buy my first buy-to-let, and go, right, are you, it's like the old thing about a dog's not just for Christmas, it's for life, and property investing is the same, isn't it? It's not as passive, it's not passive income, like it's possibly portrayed to be, it's actively managed. And you have to treat it like a business. And if you come in with your eyes wide open and know what's involved and are prepared to run a business, then yeah, crack on and make the most of it. But if you just want to buy it and expect it to make money and not have any headaches, then you're probably in the wrong game, and maybe go and put your money in an index tracker fund or something. Yeah.
Yeah.
No, it's interesting, of course.
Yeah, absolutely. And it was interesting actually. So I was lying in bed over the weekend, and we're about to embark on a series of acquisitions potentially, and so on. And I was just laying there going, all right, okay, yeah, we're pretty busy as it is. This is going to be a lot of work. And I was just like, right, okay, here's an injection of reality as to what's coming, because it's all glamorous on spreadsheets and whatnot, and making it look lovely and what have you. Then you've got to actually deliver that, and the pressure that comes with it and so on. And it was like, ooh, right, okay, here it's getting serious now. And that's, I wouldn't say frightening, but you've just got to be realistic as to what's involved with all of it. And that can be a huge put off for people. Some people just want their job, their 9 to 5, get their salary, come home, and that's it. So it's not for the faint-of-hearted, but equally, the returns are potentially there.
Yeah, absolutely. So what happens next? What do you see as kind of, just there's no huge purpose to this episode per se, as to just kind of trying to clarify what some of the news is and what the reality is on the ground. Is there anything else kind of you wanted to add to this in terms of what else is going on?
I think the overarching message for all of this is that you do you and leave the news do the news. If you find a property that ticks all the boxes, and we talk about what's your objective and what's your criteria and all of this, the various bits and pieces we talk about, is don't be put off by the news. The news is there for a purpose. It's an entertainment show. It needs views, it needs clicks, it needs all of these sorts of things. Absolutely, you need to be aware and up to speed with what's going on in the world. Property is property. If you've decided that this is a sector you want to be in, and you are aware and awake to what your responsibilities are, and you know the path that you're going to walk, it won't be an easy one, then I think you kind of have to take the news with a pinch of salt and walk your own path, if you will.
Yeah, absolutely. The PRS is a hugely important element of the housing market. Like you said, everyone needs a home to live in. I'm looking out the window and it's hammering down with rain. We're not in a country where we can just pitch up a tent or whatever for more housing. So we absolutely need housing. There's certainly plenty in the news around the lack of supply of housing and the housing crisis and the affordability issues. How does that affect first-time buyers? We can't build enough houses, for one, so there's not, and then the ability, and there seems to be some sort of shift in whether people, owning your own home is a very British thing, but also there's a decent shift to the younger generations around not wanting to own a home, and therefore, the PRS is becoming more important than ever, and that isn't going to change overnight, regardless of what changes come in. It's going to be a huge part of the supply of housing. And if you want to be involved with it, like you said, move into it with your eyes wide open and treat it like a business, and you'll do well out of it.
Absolutely.
Awesome. Well, thanks for your time, Mark. Appreciate it. And I look forward to seeing you on the next episode.
No problem at all. Catch you in a bit.
When you look beyond the headlines, the private rented sector is clearly evolving. Smaller landlords still make up a huge portion of the market numerically, but the stock itself is increasingly concentrated within larger, more structured portfolios. And whether that's a good thing or a bad thing is probably up for debate. What's clear is that successful investing is becoming more strategic, more operational, and more systems driven than ever before. If you're building a portfolio today, the question is no longer what property should I buy? It's what kind of business am I actually building? Thanks for listening, and hopefully you enjoyed the episode. Then please share it with any of your friends, colleagues, family, whatever it may be. And if you want to discuss any portfolio acquisition or property growth, then please get in touch. We'll look to see you on the next episode. Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.